level, there is a bit of a disappointment. Can't take away from that fact. Lada.
No, I completely take a point on STT, which is clearly, spooked the market. STT has come, but capital gains has not gone down.
I think Samir is with us.
But in terms of borrowing, that 17.2 need not worry people, because it's possible that 1 lakh crore will be through a switch or through a buyback, and therefore the effective net borrowing is only 16.2, because the net borrowing has come exactly in line with the market poll that we did at 11.7 lakh crore. So I don't think we should worry. 4.3 fiscal deficit also was as per expectation. Also, sectorally, we were expecting something for chemicals, and some of the chemical stocks are higher. There is some encouragement given to them, as well, some encouragement even given to exporters, textile exporters. But the buyback
is the clear positive. Samir is with us. Samir, Arora, founder of Helios. Samir, thanks for joining in. First reaction?
First reaction is that the market will fall much more. I think we have to realize what the issue was. The issue is that we are underperforming like crazy in the world, and the world is not interested, and FIs are not interested. Tomorrow, I'm sure the currency will fall 1% more. There is no story to tell if on a Sunday our market goes down 2%. Because the first thing is that you can't just do STT increase because maybe options is bad, futures is bad. But you can't go out of line with what the reality is today, that India is getting highlighted as a poor stock market, not so much the real economy or whatever. And in that sense, these other things matter after 2 weeks, 4 weeks, but it's not easy to get back investors at this with this kind of.
Okay, Madhu is with us as well. Madhu, your first reaction?
I think, Prashant, there was budget is in, I would say, more or less in line with what was expected in terms of consolidation and fiscal numbers. The STT increase, as Samir is saying, is a bit disappointing. But I would say at the same time, the buyback tax being cut is a good positive. Lots of companies, I would say, would prefer now the buyback route versus the dividend route. So I think by and large, just it's in continuation of whatever was happening. The only real big highlight from my perspective, a lot of emphasis on long-term employment generation on various schemes. That's the only longer-term positive which I could pick up. But from a market perspective, I think this event will be over in 48 hours.
Yeah. No, would you agree, Madhu? Samir saying markets will fall more. Today there are no FIIs. Rupee perhaps under pressure again. Would you agree with that?
It may fall not only because of budget or disappointing because of budget. Generally we have been little out of favor.
Okay.
And Prashant, the spate of new issuance which are even planned this year as compared with even last year, that will also suck out a lot of liquidity. So markets are in a way not been very supportive from an India perspective, and that may continue.
How big is the STT increase, Madhu? If your team has been able to tell you on options, and we have those actual absolute numbers, but how large is the increase?
Prashant, it is not very big because it's not done on a cash market. It's there on the options in the future market. But from more than the number, Prashant, is a sentiment dampener, right? We are already struggling. And this is a kind of a little bit of sentiment dampener. Then it really hurting in that sense.
Samir,
can we just get the buyback explained? Dinesh, Kanabar, buyback is going to be a big positive?
I think it's quite a bit positive. So until now, buyback was taxed in the hands of the recipient as normal income. We now have it being classified as capital gains for other than promoters. For promoters, if the promoter is a corporate, the overall capital gains tax will be 22.5%, and if it is individual, it will be 30%. So that's quite a bit welcome. Particularly small shareholders, buyback happening, being liable to capital gains tax is very, very welcome.
I think Madhu or somebody actually mentioned that it's good because otherwise it was being taxed as dividends in the hands of the taxpayers. Now, of course, it will be taxed at a concessional rate, 12.5% for minority, and then 22 or 30, depending upon
the government recognizing what happened was perhaps not.
They moved from one length where tax was in the hands of the company. Company used to pay the buyback tax to removing it and saying it's now taxable in the hands of the taxpayer as dividend income.
Yeah.
That was extreme. So if you were an owner, what happened to the loss that you were incurring?
Yeah.
So what
This
happened is
rationalized
that there was a tax in the hands of the company.
Yeah.
The corporate India represented that make it taxable in the hands of the recipient
Sure.
with an expectation to be capital gain.
Sure.
Be careful what you ask for. It got taxed as normal income. Now it's gone back to capital.
It's very
Right.
positive.
Let me get in. Samir, I know you've given your, in that sense, your first initial thoughts, but some of this other stuff, buyback, and there's a long, as Madhu was pointing out, long term, I mean, what is being laid out, maybe immediately what market was expecting has not happened. But do you think this kind of allays some of the, some of that disappointment?
We're not saying that what was expected has not come. This was unexpected and negative for no reason, because it is clear that we introduced STT in lieu of capital gains tax. Now the STT are increasing more and more, and and in an environment when the environment is clear that India last year underperformed markets by 20-30% in currency terms, even more maybe, and even this year, just in like 30 days, the currency has depreciated relative to US by 4-5% or something. I mean, in that context, this STT could have been delayed. Other things are broadly okay, but the markets are very sensitive to a few clean things. Okay, maybe there would have been no cut in capital gains tax. Okay, that even I didn't think much. But at this time when the market is already showing weakness, to add one more thing is not required. The long term, I agree, and that's why the beginning, the market itself was correctly interpreting the market rallied, because the long-term things, they pressed all the right buttons in terms of new sectors, new things, education, tourism, and all the, semiconductors, manufacturing, etc. But there's no need to randomly hurt the market at a time when the market is proving to be important, both from a currency point and from the exit of PE guys or whatever, leading to negative overall FDI or
So on
investment. At
FDI,
that time, it was not required at all.
on FDI, there is a positive in terms of those who invest in data centers. They're going to be tax exempt if they sell, data outside up till 2047. Some FDI should come.
Not only that. Sorry, please.
No, that's clearly a positive. I think we had all expected that data centers would be an area where government would, provide an opportunity for long-term investment, and by dating it through till 2047. They're clearly providing clarity and certainty. If data centers were to provide services to overseas users, then income is fully exempted. But they have not kind of limited it to saying only to global. When the original FTZ policies were given, you couldn't sell it to domestic. They've said you can also sell it to domestic through a local subsidiary. So I think that's positive.
Yeah, Prashant Khemka is also with us. Prashant, Samir not holding back. Your thoughts, what's your sense? What he said is interesting, and the way he put it, which is that it is not that what was expected did not come, but I mean what has come was not expected, and that is the reason why markets are down sharply. 400 points now, 450. Prashant.
Sure, Prashant. So I think from a stock market perspective, the STT per se is not that. And Samir also pointed out it might be more sentimental. The STT on FNO may not be as much of a negative from a cash market perspective. But capital gains tax, there was some hope, even though I don't think that people put a very high probability on it. But if there was ever a time, then investors were expecting it might be the time that capital gains tax where India, in a way stands out amongst other emerging markets or other markets in general, there could be some hope for chances of bringing it in line with the global market. So that could be partly negative. Otherwise, I think from a stock market, from an investor perspective, there isn't a major negative or a major positive. It is continuation of what was going on in the past. Maybe there were expectations that given what's happening geopolitically, the tariffs,
It'll be tough to do very much. Absolutely, Madhu. Let me come back to you. I know you have a team which is looking at this closely. Anything else which really stands out, which you want to highlight, Madhu?
I'll have to explain. Can't write it.
Prashant, I'll just take Samir's point.
Yeah.
One has to look at it from an overall balancing perspective. There is a lot which the government has done off budget, let us say that the 4 months back, the GST cut which was off budget, it came today, along with the STT, it would have been treated as a big bang budget and it would have been considered as a very big positive. So I think a lot has happened even beyond budget. It is slightly disappointing, and to that extent may have been avoided given the overall sentiment today. But I don't think this is like a make or break point from Indian market.
No, I don't think that is what Samir is saying.
And the second thing, if you once will...
Yeah. Go on.
Yeah. That's exactly what I'm also saying. That, you know, it's a knee-jerk reaction because there is some amount of also expectation which was being built up from a long-term capital gains perspective in the market. So that is also kind of discounting today as a reaction. But when we look into details, I think there's a lot which is being done in this budget, I would say, for various sectors, which is really beneficial from a medium long-term perspective. So in my understanding, from market perspective, we are back to basics. Look at individual ideas, do your bottom-up work, and that's the India story.
Okay. You know, let me look at one more positive, perhaps. Mr. Kanabar, NRIs have been permitted to invest in PMSs, and also the tax has been lowered.
So 2-3 things. First is NRIs have been permitted to invest through PMS and also make direct investment. They were always permitted. That rate the limit has gone up from 5% to 10% per NRI, and the overall aggregate limit has gone up from 10 to 24. Okay. Practically, I can tell you that we have faced this limitation when we are advising clients, and therefore this will open up an avenue. Okay. So it's quite a positive. And maybe one other thing while we are on this from a tax perspective, there are just too many things, but just one issue is on MAT. So what we are seeing here on minimum alternate taxes, government wants people to move from the old tax regime to the new tax regime. So what they have said is, if you had an accumulated MAT, which was prompting people not to go to the new tax regime, you'll be permitted to transfer, set off in a calibrated manner, and going forward, there is no MAT credit. So people will move to the new tax regime. But lots of other changes on tax side.
Okay.
You know, at one
that is the way we have to interpret no MAT credit.
Going forward.
Going forward.
Oh.
But that's only for companies who are in the old regime.
Okay.
Most of the companies have already migrated to the new regime, and the thing which was prohibiting them, which was accumulated credit, is now permitted, but to be absorbed at a quarter each year.
Got it. So not to worry so much about that. Shireen, you want to come in on any thoughts?
No, Lata, just to sum it up, I think, and if you had been listening to my panel of experts here, and these, as I pointed out, are the budget makers. They've been responsible for putting budgets together in the last few years, and they were very clear that don't expect any reversal reduction as far as capital gains was concerned. Don't expect anything on STT. Nobody went as far as to expect a hike as far as STT is concerned, which is what happened, but they were very measured in that expectation of any kind of a reversal, rollback, relief on long-term capital gains tax, short-term capital gains tax, and so on and so forth. But the overarching theme, Lata, as we've been pointing out, and I'm going to get my experts to comment on that, this is a budget that is reacting not just to the here and now. It's a budget that's now laying out the priorities, the focus areas for the next 5 to 10 years. Nuclear power, I told you that we're going to see a mention of that, and that's exactly what the government has done on the electronic manufacturing sector, on AI, on data centers, and so on and so forth. So there is plenty there that is likely to play out in time, but the market, of course, reacting to what the market will react to, which is the here and now. But let me get our panel of experts to get right into it. Mr. Bajaj, you were absolutely clear. Don't expect any relief on LTCG. But were you expecting an STT hike, which is what has come in for futures and options?
So I think that has come basically because there is an attempt, there's a lot of news of people actually losing a lot of money there. So something was done in the intervening period. So I think that is a measure perhaps to control that, and not so much as a measure of raising revenues.
Raising revenues, my hunch was they would revive disinvestment, at least the disinvestment target, 80,000 crores versus 33,000 crores. What do you make of that?
So I would say that there are some things which are in the offing. For example, the IDBI disinvestment should happen and the money should come in the financial year 26-27. And also maybe LIC's follow-on issue might happen. So I think 80,000 crores is something which is very reasonable, seeing these two things in context. So I think the government has been very, very conservative on that aspect.
Conservative still, but a higher, much higher target that we've seen in the last few years. Mr. Chakrabarti, you know, from a overarching standpoint, what stood out for you as far as this budget is concerned?
Couple of things. At least my expectation was to retain stability. So if you see across the budget, there has not been a change to radically move from one end to the other. It reflects a government which is very matured now, has been there in power for long. They're continuing with the agenda of infrastructure. If you see, NIIF, Credit Guarantee Scheme for Infrastructure. So those are stability measures. They are provided for all the major steps that has been taken, especially towards technology, data center, and so on and so forth. So there, special impetus has been given. Again, on the infrastructure side for high-speed rails between major cities which are growth center. And those growth center, if you see in the scheme of things, have been recognized.
Yes.
And I also see a major thing, I hope it turns out to really push the economy, is also this high-level committee on banking for inclusion and for consumer protection. I guess that is the
She also used the words of improve and efficiency and scale for Viksit Bharat. What is the India banking sector requirement? In that context, do you believe this talk around consolidation, etc., or perhaps even hiking the FDI limit for PSBs? I mean, some of those measures may be part of now what this high-level committee looks at?
This committee, one has to see ultimately its terms of reference. Beyond FDI is already at 75%. Making it 100% will perhaps increase a little bit. It's more important that the consumer confidence is retained. Of late, those digital arrests and all those things had dented it a little bit. And not that the banking itself, however, an overall thing, and FM had referred to it. So I guess referring to consumer as such has been, I see it as a very, very positive step. And also the credit guarantee for infrastructure. And she has also talked about, this is my favorite, the bond market.
Yes, she has talked about the bond market. But Mr. Aramane, let me ask you, sir, on the defense side, you know, it's, I think, gone up to about 5.69 lakh crore rupees. We were hoping that she would talk about it in the budget, but she hasn't. So on balance, your take on defense?
I just got confirmation that overall budget has grown by around 21%.
21%.
And the Capex also has grown by 24%. This is huge. As expected, the defense allocations have gone up substantially. And most of it will go into...
And the 21% is BE to BE? Okay. So just to clarify, the defense allocation is up 21% BE versus BE. So if you do BE versus RE, it will be a different number, but BE versus BE up 21%, which is exactly what you had said.
Yeah. This will certainly boost the preparedness of our military services. And I hope the defense industry will also get a great fillip through this. Apart from the allocations directly, there are other important announcements made today. One is the defense corridors, which will get boost from the 7 sunrise sectors, especially semiconductor sector. They will help the defense production to be seamless. And also supply chain problems will be sorted out because of that.
Okay, so that's the other, the defense corridors is the other announcement. Some disappointment there. You were expecting customs duty rationalization. That doesn't seem to have been announced, but there's a lot of exemptions that have come in for specific sectors, for specific components, and so on and so forth.
Yeah, Shireen, so yes, the big ticket customs rate rationalization has not come through. But part of the reason could be that the government is banking more now on FTAs, which are also providing a huge opportunity to initiatives like China Plus One and others, which other trading partners are looking at. But there are some changes on expected lines also. For example, the change for SEZ units supplying into the RTA, I think that's a good move.
But many caveats attached to that, and what is that time period for that one-time window is something that we require clarity on as well.
So we'll need to see the fine print to decipher that. But that's a welcome move in any case, and I think it will help utilize the unutilized infrastructure in SEZs. The other thing which we were expecting, which has come through, is a lot of measures on trade facilitation.
Right.
So the AO scheme has been liberalized, advanced ruling, the duration has been extended. And thirdly, which is also an important move, is that the single window remit has been extended to other border agencies. So I think these are also important in their own right.
And as we speak, gentlemen, the markets are coming off their intraday lows. Before I, get Prashant to give us a quick rundown of what's happening in the markets, let me bring in a quick first comment from Anish, the CEO of the Mahindra Group. Anish, plenty there for different sectors. Your first take on Budget 2026.
Shireen, good afternoon. It's an excellent budget. It focuses on sustaining economic growth and manufacturing in particular. For India to grow at a rapid pace, manufacturing has to take center stage. Viksit Bharat talks about manufacturing being 25% of the economy, which means it has to grow 16 times in the next 22 years. And the budget puts in a lot of detail that will help manufacturing, including infrastructure, and that's a huge boost. Atmanirbharta is another key factor in the budget, something that we need given the volatility in the world around us. And specifically, the rare earth corridor is a great step in that direction. And most importantly, I would say, is inclusion. With the focus on SMEs, they have to be an integral part of driving economic growth. The focus on small and marginal farmers, on youth, on capacity building, on women. So overall, Shireen, headlines from our standpoint is just an outstanding budget.
An outstanding budget as per Anish Shah. But Anish, what does this now mean as far as business is concerned, specifically for the Mahindra Group? You've got companies across those diverse sectors. What does it do? Does it move the needle for you across your businesses?
It helps keep us on the path we are on, because we are on a very rapid growth path. And as we look at India becoming more competitive from a manufacturing standpoint, it allows us to make in India for the world and attracts other companies to come into India as well, which is excellent for the Indian economy. So that is a huge boost. As we talk about taking leadership in hospitality, that augurs very well for a hospitality business. Our logistics business is very well placed. And overall, we see multiple sectors benefiting from this budget.
Okay, Anish, I'll come back to you in just a second. Prashant, what's happening with the markets coming off their lows?
Off the lows by 100, but we were off the lows by 200, and we've given back that 100. So it's a pretty, and budget days are, the range is anything between 1 to 5% if you look at the last 7 budgets, and I don't think this is turning out to be that big on the extreme end, but this is big enough. That what's, of course, taken a bite out of things is that STT hike, and we put out the actual percentage increase. On futures, the STT hike is 150%, and options, STT hike is 50%. And of course, there is no relief on the capital gains front. It's not as if there was realistically an expectation that capital gains tax will be lowered, but the STT hike was not expected. And I think that is why, we've got this kind of reaction. I think if you just look at names like Angel, BSE, the entire capital market space is down sharply. They're all up about 5-6% from the lows, but even then, 8, 9, 10%, depending on what you look at. The capital market index will give you that story at this point in time. So 330 points lower on the Nifty is what you have at this point in time. I think Prashant Khemka is with us still. I'm not sure if Samir and Madhu are there, but Prashant, if you want to just quickly come in with anything else you're picking up, anything else worth highlighting from an investor point of view.
Well, just quickly, I would say, to my mind, the STT hike on FNO is not much of a negative for investors, certainly not for us from an overall market perspective. Yes, if you're investors in capital market, but intermediaries, like you mentioned, brokers and all, that segment may get affected. But it's a better way to, regulate participation of retail investors, get some revenues for the exchequer, rather than coming up with other non-revenue generating measures barring such activity. So that, to my mind, is not something that is bothering the market. Yes, the capital gains tax, to some extent, there was expectation. That is bothering. And second is absence of anything, that in light of what's going on the tariff front, there were certain expectations that this budget could have a step function kind of announcements on a variety of aspects that would boost growth, economic growth, whereas this is more of a continuity budget. What has been policies that have been working for last 10, 11 years, which have given us robust growth of 6% odd. It is continue. It's a stock-taking budget. Okay, we've accomplished this, and these are all policies that have worked well. Let's continue with them.
Yeah, let me bring Sajjid into the conversation. And as we do that, let me also give you some more numbers. The railway sector allocation. So if you take a look at the railway budget, up 10% B to B, that is the allocation as far as railways are concerned. RBI dividend at over 3 lakh crore rupees. That is the number there as far as the RBI dividend is concerned. Sajjid, Chinoy, one other number that we haven't put a lot of attention on is the 16th Finance Commission. As we reported here on CNBC TV18, the devolution staying at 41%. But what about the borrowing number, Sajjid? Any concerns there that the market is picking up on?
So I think the market was expecting a smaller borrowing number, but there are two known unknowns here, Shireen. One is whether there'll be a switch by the RBI, which is also what the market was building in, and there is no clarity, and that should bring the number down. Secondly, if you at first glance, if you look at the borrowing breakdown, what you see is quite a lot of conservatism when it comes to small savings schemes. So if small savings tend to be higher than what has been budgeted, that creates the possibility that in the second half of the year there could be lower borrowing. But yes, at first blush, the gross borrowing numbers higher. And I think markets are hoping that there'd be some switch from the RBI. I'll just make one more quick point on the broader math, Shireen. So no real surprises there. Some had expected a deficit of 4.2. We're close to that. We're at 4.3. I think the key is going to be nominal GDP, because this year we're clocking 8. Next year the assumption is 10. If we do achieve a 10% nominal next year, then the gross tax assumptions at 10.4 are not very ambitious. If nominal GDP is lower, then that will take some doing. One final point I'll make is on Capex. If the RE numbers are achieved, Capex growth will be just 4%, because the base last year was higher. And so if you take the budgeted number on the base, it was 4. Next year's number is much higher at 11.5. But a compound annual growth rate over 2 years is closer to 7 to 8%. And I think the bigger message is, that the center has done what it has to on public Capex. And now it's important that private Capex pick up to fill in some of that gap.
Yeah, and I think that has been made very clear by the government that it perhaps has reached its peak in terms of being able to enhance that Capex number, the point that you're making, Sajjid. Let me also bring in Debashish Panda, former chairman of the IRDA and also a budget maker. Now Kartavya Bhavan, you can't call it North Block anymore. Mr. Panda, your big headline from Budget 2026.
I think it's an outstanding, excellent budget, particularly when we are navigating through very, very difficult circumstances, uncertainties, challenges. What interests me is that the finance minister mentioned about the structural reforms, which will continue and which are very necessary. The other big thing that she talked about is a stable and a very robust and resilient financial sector. And in that context, she even spoke about, setting up a high-level committee to look at the banking sector in the country and how to take it forward in terms of aligning it with the vision of Viksit Bharat 2047. So I think that itself is a big message and a signal that maybe there'll be a lot of new things we will see in the banking system, bigger banks, more consolidation maybe, or even allow the corporates enhance the FDI. All of that could be possible. And actually, we need a strong banking sector to achieve the larger goal of Viksit Bharat by 2047. And then, the capital expenditure spending on infrastructure, as we all expected and we discussed the other day, has been given the priority. And what she has done is that she has taken care of each and every sector which will benefit. The MSMEs in particular are being given a lot of attention with a variety of interventions. Then, of course, the rare earth corridor, the rail corridor, all of that, again, I think will give a big fillip to also position India as a leader in the global value chain as well.
Yes, many measures there, 10,000 crore rupee fund for SMEs, and of course many linkages to the TREADS platform and so on and so forth in continuation of the earlier measures. But I want to get all of you gentlemen to comment on what the government has attempted to do to try and draw in flows. And Mr. Panda, I'll start by asking you, the changes to the investment limit made for PROIs to be able to invest in Indian equities, and some of the other measures, for instance, capital gains relief for people who want to do data centers and so on and so forth, cloud services till 2047. The long-term strategy of this budget to try and draw in flows and investors. What would you say were the big highlights there? Mr. Panda?
Yeah. So I thought the question was for Mr. Chinoy, so I lost. Could you please recap the question?
No, I was just saying the measures to try and draw in foreign investors and foreign flows. Does the budget deliver on that?
I think much more needs to be done in terms of, I think the previous speaker spoke about the markets, the stock markets, how capital gain reduction could have actually been a big benefit to the stock markets in terms of attracting more, money into that segment. But having said that, the FDI has recently been opened up in the insurance sector. I think the structural reforms would also look at opening up in other sectors wherever necessary, of course, keeping those safeguards. But clearly a signal towards, attracting more capital, whether it is in the form of FDI or FPI or in the form of equity. So all of that is necessary for us to, for the country to grow at the rate at which the projections have been made.
Interrupting you, sir. My apologies, I'm interrupting you because we have the first government reaction now coming in after the finance month. Mr. Bajaj, let me start by asking you, on balance, if you look at the budget math, you look at the budget numbers, this government has delivered on its budget math. So how does it fare on that front? And on the intent and direction of reforms, what would you have to say?
So I would say on the budget numbers, the government has been very careful of giving the right numbers, which was a blame that the media would put on the government a few years back, which is not the case now. And if you see the growth in the total expenditure, the revenues, and even if you look at the fiscal deficit and the ambition that they've shown on debt to GDP is very, very limited. And I think on all these things, the government needs a pat on its back that it has not played around and tried to show in the budget something very nice picture, and at the end of the year, it doesn't come out to be true. I think what it has said, it can only improve from what it has said and not go lesser than that.
And on reforms and the direction, the path forward?
So reforms, I think, is now a continuous process, as the government and the PM has been saying that. So we've had the labor reforms, we've had the nuclear bill going through. I think it is a process which has been mentioned in this budget. For example, these two aspects I like to call out. One is the, which your Bombay guest said, on data centers and GCCs.
Yes.
These were two major demands. They are leading to a lot of employment, a lot of investment into the country. And these things were the real pain points for them. And I think it's a great step on the tax authorities to do that.
Absolutely, a good step there to allay those concerns. Mr. Johri, on balance, your big highlight of what this budget could mean for the economy.
I think on the indirect tax front, I would again call out manufacturing resilience. They've picked up on sectors that were affected by tariff tantrums, particularly labor-intensive ones. You have leather, you have textiles, for which relief has been given. Also, futuristic and new age kind of industries where relief has been given. Some element of relief for climate change, nuclear energy, for example, has been given. Those projects have been given. So overall, the trust is fine. They've not upset the apple cart. They
haven't upset the apple cart. The final word to you, Mr. Chakrabarti. How do you walk away from our budget headquarters today?
Well, as one sees, it's very realistic budget. It carries on the assumption on the tax front worries me a little bit because it's 7.8% B&B, if the numbers that I see are correct. I guess perhaps that assumes some lower aggregate demand.
Okay.
And as you say, industry instead of heavy lifting is just doing lifting. I wish it does the lifting at least. And the demand on LTCG and STT goes away. Because that leads to, and buyback is also a very good step, because that money should actually go by way of dividend if they don't have money to spend, or actually put it in projects. Otherwise, a lot of shareholder money then is taken up by promoters and leads to inequality in the entire setup, which is a major concern, has been addressed. So it's a structural impact that makes on the overall inequality in the system. So in a sense, a very positive and right step. And if you ask me, as I had mentioned before, this high-level committee on banking, on the manufacturing side, on the infrastructure side, Capex has been retained up to the level that could possibly be retained. And on debt side, yes, it's been kept within the limit. I always expected a glide path to be sharper, but however, there are real exigencies and expediencies.
But thank you so much, Mr. Chakrabarti, Mr. Johri, and Tarun Bajaj for joining us here on CNBC TV18 through the course of the budget month and for being our budget editors. Appreciate your time. Let's go back to the markets now.